The U.S. dollar is lower to kickstart the U.S. session. Late yesterday, Fed's Waller did say that he still supports a 25 basis point cut at the July meeting. He is scheduled to speak on Bloomberg TV, I think, or is it Fox? I don't know, one of those in the next few minutes. So we'll see. I'm sure it'll still stay the same thing. Anyway, the dollar is lower. In this video, I'll take a look at three of the major currency pairs: the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a technical perspective. So let's get started. Looking at the euro on the hourly chart and trading yesterday, the price did dip below this swing area that had earmarked as a target level on the downside. It is defined by a number of different swing lows and swing highs through here before finding support here and moving to the upside. The price returned back to that level in trading earlier this week on Wednesday to be exact. In trading yesterday, we did find early support against that level, bounced higher, then fell below it briefly through here, and then rotated back to the upside. In trading here today, we continued the move to the upside in the early Asian session with the price extending up toward the 100-hour moving average. Remember that moving average was a key resistance level right through here, and even here. We did have little breaks right here in this spike over the decision to fire Fed Powell or not. But we reestablished a resistance right against that level before moving to the downside. So coming up to that 100-hour moving average, we did the customary thing, found willing sellers against that level, moved a little bit lower, but found support in the swing area, and then since it has moved back above the 100-hour moving average, you can see how the price is holding support against that level. So that 100-hour moving average at 1.16306 down is now close support. If it holds above that level, then we look toward the 200-hour moving average up here at 1.16681. The price has not been above that since this day right here, where the price moved above it and then tested the 100-hour moving average. So it remains a key resistance level on the top side, and it is within this swing area between 1.1663 and 1.1691. Remember that level going back to our daily chart, going back in time, and take a look at this swing area. This is the 63 to 91 area right through here where we had support, and then resistance before moving to the downside. We moved back above that level over here. And we stayed above that level right through here, and we stayed above it through here, and we stayed above it mostly through here before breaking to the downside, had that spike. But we need to get above that 200 and that swing area to increase the bullish bias for this euro versus U.S. dollar. Let's take a look at the dollar versus yen next. So we'll focus on the 4-hour chart. And as you can see, the price has been trading above and below this swing area. The swing area is defined by different swing lows and swing highs back here between 148.56 and 148.73. The price spiked to the downside on that Fed firing comment. We've since moved back up to that area and been trading above and below it over the last few trading days. If we move above the 73 level, that's more bullish. If we stay below the 56 level, that's more bearish. We're currently trading at 148.53, just below the level, but we're not exactly running. The dollar versus yen is kind of quiet. We do have elections there, and interest rates to move higher there, which you would think might support the yen, cause the dollar yen to move to the downside, but it's not. On the top side, we do have the 50% retracement at 149.37 as the next key target on further upside momentum. On the downside, we'll look back toward the high price that we saw in the month of June. That level came in at this 148.019 level. If we break below that level, then we look back down toward the 38.2% retracement. Finally, let's look at the sterling versus U.S. dollar. We'll focus on the hourly chart for this currency pair. In trading yesterday, we moved up to the 100-hour moving average on the spike this week. Again, I'm saying the same thing over and over again. We did move above that 100-hour moving average, but for the most part did find, like the euro versus U.S. dollar, resistance sellers ahead of that 100-hour moving average going back in time on this trend move to the downside. Getting above that level in the Asian session today gave the buyers more confidence, but then we fell back down below it right through here briefly. Found support near the low price through here and here, and the high prices through here and here and here, but rebounded back to the upside. So the buyers are back in control, at least in the short term. They have work to do. The work to do would be to get above the 50% retracement of the longer term move up, or the move up from the May low to the high price right here. Just imagine this goes to the May low down through here. So getting above that level at 1.34638, and then the high of this swing area at 1.34 1.35. Then further work requires getting above the 200-hour moving average at 1.34. There's that 903. And then we start to look toward the swing area, and finally the 38.2% retracement. All of this move to the downside. All that has to happen if the buyers are to take back more control. If they can't get above the 50% retracement of the range since May, then the buyers are not winning; they're still losing. So keep that in mind. If we move back below the 100-hour moving average, the sellers are back in full control. So there you have a look at three of the major currency pairs to kickstart your trading day. We do have on the economic calendar, building permits and housing starts in the U.S. At 10 a.m., we have the preliminary Michigan Consumer Sentiment Index being released. It also is the last day that the Fed officials can speak before their blackout period ahead of the FOMC rate decision on July 30th. We'll see how many speak today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.